Hello traders, today is the 12th of April. My name is Hornsey, market and active trading, and today I'm looking at gold and silver. Okay, before we actually get into the precious metals, going to look at the utrade.com Forex heat map. See here that the Australian dollar, New Zealand dollar doing really well. Also the US dollar. So the US dollar's sort of seeing flows into it. It's obviously trading around the $100 sort of level, which is being supported by yields. We're in a high inflationary environment, and generally during high inflationary cycles, metals and commodities do well. So that's why we're sort of seeing flows into these commodity pairs probably. Right, going to the trading view charts, we've got the gold silver ratio, and this sort of shows how well gold appreciates or depreciates against silver. Obviously, a big move up here into the pandemic lows. There's a bigger move into gold than there was into silver, and then that sort of decreased down here. We did break market structure, so we had a low here, August 2019, that got broken solidly by a year later in 2020. So breaking market structure, big impulsive move to the downside, broke through the weekly 200 period moving average, which is this blue average here. You can see it's acted as dynamic support and resistance in the past. Most recently, it's sort of held as resistance. We did have positive divergence in RSI. So we had this swing low here in August 2020. Then February 2021, sort of several months later, we had a lower low, but we also had positive divergence on the RSI. That flipped when price got back towards the 200 period moving average here. We can see that we had RSI overbought at this swing high. And then by the time this higher high on the price action sort of printed, RSI hadn't. So positive and negative divergence within the last couple of years. We did have basically a 5-wave impulsive move to the upside. So from this low, is wave 1, pullback is wave 2, big impulsive move, wave 3, correction, 4, impulsive move, green candles, wave 5. So that's possible wave 1 of several corrective waves, the most impulsive. So we could go sideways for longer, but I'm expecting, what I'm expecting really is for the gold silver ratio to keep coming lower, as RSI is sort of showing that it can't sort of show momentum to the upside. So at the moment, I'm thinking gold silver ratio momentum to the downside. Now, if I start with gold, we had this big sort of spike higher, kind of made a double top around 20.52 an ounce, indecision candle really. The bulls were in control, but then we had a bearish week after that. So around mid-March, bearish week, and then we've had sideways movement since then. So if we go down to a daily chart, see it a little bit more clearly. Got this sort of big reversal pattern here, made that weekly swing high. We had the low of the 13th of March, which acted as resistance yesterday. So we had a move higher yesterday that got rejected. And because I'm sort of seeing this drop and then this basing pattern, I'm expecting a sort of similar size drop again, sort of like a measured move to the downside, which will take us down to the 200 period moving average. That's kind of rising up here. If we look left, we've got on this daily chart a couple of levels of imbalance. So if we were to get below this sort of swing low here, I'll be looking to 1872 and 1841 as a possible target, as well as being supported by this 200 period moving average, with the possibility of a sort of a continuation lower, taking out this double bottom and the liquidity that would be under there. Now, there's no sort of real RSI divergence, positive or negative, so we're just sort of seeing momentum go to the side. But like I said, anyone that was in this trade going sideways or waiting for a mean reversion type trade, they'd have waited for a spike higher, stop out some traders with their stops up there, and then come back down into the middle, if not go lower. So that's what I'm expecting gold to do. Now, looking at silver, we look to the left. If I go to a weekly chart again, now with silver, we'd had a big spike up here, August 2020, and then another spike up here, January 21, and you can see that the RSI itself was making a lower highs. So negative divergence between RSI and price action. We're kind of trading around So if this was a high, this was a low, this is another significant high, then the market structure break needs to be here. And we haven't really had that. We sort of dipped through it. So we've spiked through, had a look below. We've got this big imbalance here. So there'll be a big volume void here. So with this massive impulsive move to the upside, there wasn't a lot of volume obviously traded. The sort of volume comes when we go sideways, which we're sort of seeing right now. So if we were to get away from these highs, maybe there's another push up to the 27.4 level to test the low of this sort of June 21 weekly low. However, considering we got this big indecision candle here from around early March 2022, this swinger high here that's formed now between this 3 candle pattern, we can't get back above this weekly low. We've rejected it this week so far. So I'm thinking we come back lower and then we head lower towards the $21 an ounce on silver, take out the sort of double bottom, the liquidity under here, move down towards the 200 period moving average. And if you look left, we still got then just a couple more dollars worth of downside move before we get back into an area of balance. So this weekly high from June 2020, that would be my next target, and that would be below the 200 period moving average, which obviously encourages more trend followers to sort of go lower. That takes us down towards the 15. Now, if that was to happen, we could look at a Fibonacci retracement tool, take it to the highs, and that would take us to the 0.786 deep retracement on the fib. So that kind of works. Also, if we were to, potentially just go down to halfway, just sweep below that double bottom, have the 200 period moving average rising up, maybe that meets us at that sort of same time. That's 50% of the trade to the downside. So values around 1842 towards 20.5 really. So for me, gold and silver, they both look like they want to come lower just to find some value, to find more buyers, to stop out some traders that are determined to go longer. And by that, I mean, if we look at the ActivTrader sentiment indicator, 93% of traders are trying to go long, 7% are trying to go short. That to me is just too extreme. Like the trade is well crowded to the positive side. So I'm looking to be a contrarian, to fade that, and for this to come lower. So that's kind of my thinking. That's what I'm seeing. And yeah, hopefully that makes sense. If you've got any comments, obviously leave them below and I'll try and answer them in a further video. All right, good luck, and I'll speak to you again tomorrow.